Hey there, Richard from No Pants Profits coming to you today again. Well, maybe for the first time, maybe you've seen this before, not in a Hawaiian shirt. I normally wear a Hawaiian shirt, and people are like, hey, why aren't you wearing a Hawaiian shirt? Now, I am still true to my name. I got no pants on, but I'm wearing a very ill-fitting Christmas sweater. This is Microsoft's Christmas sweater from 2021, where the day that Minesweeper died, from 1990 to 2021. So 31 years of Minesweeper, and it is very, 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 very hot in Florida right now. So people are going, why are you wearing a sweater? And that's because we're going to talk about a new app that is an app and also a venture capital fund called, of all things, Sweater. So with my very tight sweater, because, you know, it's holiday time, even though it's June, I enjoy me some food and beer. Sorry. With this very tight sweater, we're going to talk about Sweater. I signed up for Sweater almost a year ago, and I just got my invite today. Well, probably got it 2 days ago. They sent me an email saying, hey, we invited you. Where are you? So I want to talk about what Sweater is. Right now, their YouTube page only has 117 subscribers, which I guarantee you more of you are going to watch this than are on their page. And I'm going to show you everything. Now, I've gone ahead and I've signed up already, but I'm going to walk you through my sign-up process without my personal information there. And then we're going to explore the app together. I've never done it before. So this is kind of like looking at an IPO. What Sweater is in a nutshell is it is a venture capital fund. I've not been doing a lot of stock market videos lately because the stock market's manipulated. There's a lot of people in it, you know, short sellers, longs, shorts, options expiration. Today's a huge options expiration day. It's Friday, May 27th. But we're going to talk about this because this is venture capital. You can't really short it. These are not public companies. You're buying into companies before they hit the stock market. Companies like Uber, Lyft, pretty much every company you've ever heard of in the tech space in the last few years all started with venture capital. So this is a way that you, with a very small amount of money, I put in $5,000 and I put in $50 a week. Spoiler alert, is what I've set up to actually invest there. But I'll show you how this works. I'm going to go through all the videos that are in the app and everything like that and kind of help you out and see exactly what's going on. So first, I want to take a look at their YouTube page because I think that's telling. Now, nothing's been posted to their YouTube page in about 10 months, but they did have one video, which is 45 seconds long, that's got 1.5 thousand views, and then they have another one that's got 208,000 views. So I think we know which one was more successful. Let's take a look at both of them. Again, I'm not trying to steal their videos or anything. I'm just trying to show you the whole picture. I've not even seen these videos yet, so let's take a look. They're very short.
This is venture capital. It's just rich people getting richer. And this is Jesse. Jesse knew a lot about investing. He helped VC firms turn money into more money, a lot more money. But now he wants to work for you. And that's why he made Sweater, a way for everyone to invest in venture capital. Sweater's team of analysts invests your money in a carefully curated portfolio of smart startups that haven't gone public yet. Sweater reduces the buy-in of venture capital, which is typically millions, to something more realistic. Sweater is the first VC fund for everyone. Sign up now to be first to get access. Join our tight-knit community today.
A lot of sweater puns in there. Sorry, a lot of sweater puns in there, so I'm sure they'll be happy that I'm wearing a sweater to talk about Sweater. But let's take a look at their other video, which got a lot more views, I think. Let me see. I think we looked at this one first. Yeah. So let's look at this one. Let me jump back to the computer. We'll take a look at this one here.
This is venture capital. It's just rich people getting richer. And this is Jesse. Jesse knew a lot about investing. He helped VC firms turn money into more money, a lot more money. But now he wants to work for you. And that's why he made Sweater, a way for everyone to invest in venture capital. Sweater reduces the buy-in of venture capital, which is typically millions, to something more realistic. Sweater's team of analysts invests your money in a carefully curated portfolio of smart startups that haven't gone public yet. Sweater is the first VC fund for everyone. Sign up now to be first to get access. Join our tight-knit community today.
All right, so I guess they're very similar. The two videos are very similar, but maybe one's cut for time. We'll see. I think they were two slightly different times. Yeah, one was 38 seconds, one was 45 seconds. So there was a cut down video, and they went from 1.5 thousand views on one to 208,000 views on another. And I will tell you, I'm number about 1,600. We'll see the actual number in a little bit, but I'm number about 1,600 to join Sweater, and invest in Sweater. So I guess the question is now, how do I sign up and what is it? I want you to watch this whole video because you can't actually figure out what it is till you sign up. I want to show you the whole process. I'm going to explore the app myself. To be perfectly honest, this is going to sound insane. I put down $5,000 and a $50 a week every Friday investment, completely blind in this, just based on their marketing. I've not seen any of the companies they're involved with yet. I know that sounds crazy, but this is why I wear no pants and a sweater in very, very hot weather in the state of Florida, South Florida, to be more specific. But let's go ahead. I want to show you kind of the sign-up process the best I can. And I'm going to show you some of the videos they have during the sign-up process. So you do have to actually sign up for Sweater on their website. There may be a referral code. If I do find a referral code or some way to get you in quicker, I will put something down below. You know, we're exploring the app together. I'll show you exactly what you get when you open the app for the first time. As of right now, again, you do need a referral code, but when you open the app for the first time, you get this page that literally says, ready to invest. We'll walk you through becoming a member so you can start investing in the Sweater Cashmere Fund. So right now they only have one thing. I love the Sweater puns, let me be honest with you. Guys, if you're watching from Sweater, I love the Sweater puns. Wear no pants. Wearing Minesweeper sweater. I know you guys love this sweater, but look, I'm not asking for anything, but if you watch this, shoot me a DM. I'd love one of your sweaters from your video. I don't know if I'm gonna get one anyway, becoming a member, but I'd love one of your sweaters. Okay, back to not begging for things anymore. Ready to invest? We'll walk you through becoming a member so you can start investing in the Sweater Cashmere Fund. These are photos right now and not the live app because I've already gone through the process and put in my personal information. So it's going to ask you some personal information. I've not got this filled out intentionally. You got to put in first name, last name, date of birth, social security number, street address, apartment, city, zip code, state. And then there is a W-9 certification saying that you're an American citizen. Here's the important thing. Very, very important. You do not need to be a qualified investor to use Sweater. To get into a lot of these, you'll see in some of their videos, their intro videos. The cool thing is a lot of their intro stuff's done in videos that anybody can join as long as you're a U.S. citizen. You can be in the stock market. They've worked with the SEC and everything like that. You don't need to be a qualified investor, which is actually a really cool thing. But I'm legally bound by the terms and conditions, and I want to show you some of their videos. Let me make sure there's nothing here yet. So I want to show you some of their videos right now. I'm gonna pop all this down. And I'm going to go over some of the ways that they've got the videos here. Let me bring up QuickTime real quick. All right. So you see a couple of videos inside the app when you open it up. And this is actually from the founder, and he's wearing his sweater. And I'm just going to show you now. The reason I want to show you this is very important. You actually can't see these videos. They're behind not a paywall, but they're behind a information wall. I mean, I would personally like to see these videos before I give someone my social security number. So I'm going to show you as much of this app if you can. If Sweater has a problem with that, I'm happy to take down this video. But I don't think they're trying to hide anything. I think they just want to get your information before you kind of see exactly what's going on. So here, I'll give you an idea. Let's just jump back. I'm going to play some of these videos here. So this is the step right after you sign up.
Sweater is fully managed. That means we do all the heavy lifting for you. This includes finding great companies to invest in, conducting due diligence and research, executing the deals, and then taking care of the companies after the fact. You get courtside seats the whole process, and we report everything back through the app. So sit back and enjoy the ride.
So that is the first step after you give them your information. And let's go to the second. Actually, let's go to this one right here, because this is the third page.
An investment into Sweater is an investment into venture capital. That means we're putting your money into companies that take a long time to grow and mature. This requires a long-term mindset. This is not your brokerage account or your crypto account or other places where your money can move in and out fluidly. So when you make this choice, make sure that you understand that your money will be committed for many years to come as we build the next generation of world-changing companies.
So yeah, what he's saying right there is this is not something that you can go in and out of every day. The idea is you're investing for the long haul. So this is different than crypto, this is different than stocks. This is you are saying, I want to invest this amount of money in these private companies, which honestly, we don't even actually know the companies yet. But hey, I guess the marketing worked. Let's take a look at another video. I'm not really sure. It was in these first few pages. I didn't get the actual page number. We'll take a look at this video. Explains a little more what's going on.
Making an investment into a sweater fund is kind of like buying a stock, except we call it a NAV, or net asset value. So if you made an investment of $1,000 into the fund and the NAV were $20, you would get 50 units in the sweater fund. When we gather everyone's small investments together and make investments in companies and have those companies grow in value, that value is reflected in the NAV, which will go from 20 to 25 or 35. And when you sell your position at that higher price, that's how you make your returns. We try to keep everything simple and easy to understand.
So NAV, that's the value per share. Now, as of right now, so this is May 20, I'm going to give you the time, 3:55 p.m. Eastern Time on May 27th, 2022. The NAV is $20 a share, and you'll see there's a $2 processing fee when you do that deposit. But again, we're going to look through the whole app. I just want to show you, these are things you'll see once you sign up, so I want to show them to you now. So this is in the sign-up process. It is a 13-step sign-up process. This is step 10. I think 10, 11, and 12 I'm going to show you now. Let me move these into place. So we got 10, we've got 11, and we've got 12. All right, so I'm going to show you 3 more videos real quick. So here's 10.
The prospectus is a technical document that we worked hand in hand with the Securities and Exchange Commission to make sure we're following all the rules of what it means to be a registered investment company. In this light, we want to make sure that we're being as transparent as possible. Our entire investment thesis is lined out in that document, and we'll often point to that document to answer your questions along the way.
You know what's funny is we're going to actually look at that document because that's like their S1 per se. But let me move this over. Let's move 10 over here. And let's take a look at slide 11. And we're going to go through the whole app, which I haven't done yet. So I want to do it live with all you. Slide 11, or number 11. I took a picture of it.
The pricing of the fund changes on a day-by-day basis. We call that striking the NAV. So when we strike the NAV, what we do is we look at all of the assets that we hold and all of the companies that we're a part of and determine if any of them have changed values. And we do that every single day. On many days, nothing will have changed. On other days, there could be really big changes. All of this is reported and reflected in the app so that you can access it at any time.
So you'll see that's how they're kind of giving you a price. And we're going to go through the app. And let's take a look at the last video here, which is number 12. Page 13 just says, yay, you've got it. And I'll show you what page 13 says in a second, because I've got page 13. It gives you your actual sign-up number. Take a picture again.
An investment into a sweater fund is an investment into the venture capital asset class. This asset class is inherently risky, and we want to be as transparent as possible. Do not invest what you cannot afford to lose. We're grateful that you want to help shape the future, and taking a risk is one way to do it. Let's go shape the world together. Let's just make sure we do it in the most risk-adjusted way that we can.
And that's when the SEC gets involved, you know, risk-adjusted and other fun things like that. But I will show you. So this is actually the next screen. This is still a recorded segment, not a live segment. This is actually, hey, how much do you want to invest? And I put in $5,000, which at right now at $20 per unit, $5,000 would give me an estimated 250 shares, but it actually gave me like 249 and change. I'll show you why. Let me see if I can get to where it gave me 249 and change. Yeah, so it was giving me 249 and change because what they've got is they have a $2 processing fee to deposit and to withdrawal. So I decided to up it to $5,002 just to kind of get in that same perspective. And I went ahead and put that investment, and you'll see I am number 1633. That is my member number. We're excited to have you as a member of our tight-knit community. Tight-knit community. Another sweater reference. I like it. This company's very punny. Funny. You know, and then I had to do email and phone verification and all that. I head to my dashboard and start exploring my whole new world of venture capital, and now we're gonna go live. We'll do it live, kind of like a Bill O'Reilly's famous outburst. Let's do it live. So I'm gonna open up the Sweater app, and we're gonna do it live. And it's gonna be the one right in the middle here. Let me change my background there so you can actually see. The reason we're going to leave it this way and not in the phone perspective is because I think there's a lot of videos in here that might change. So, yeah, Venture 101, you know, what is Sweater? Let's see what they say, what is Sweater, and I think what's nice is we'll just hear it out
So you
loud.
want to try on Sweater? Sweater opens up venture capital investing for everyone. Before Sweater, investing had two different games going on, public and private. Everyone has access to public investing, the stock market, mutual funds, but private investing, like venture capital, is reserved for the ultra-rich, with buy-ins as high as $2 million. So if you don't have island buying money to foot that bill, Sweater has lowered that to something more realistic. After your initial investment, you're able to make smaller monthly deposits to grow your portfolio. Additionally, Sweater features news from the venture capital world, founder interviews from the top private technology companies, as well as reporting on exciting companies Sweater has invested in, which you now partly own. You get a front row seat, seeing your investment grow. Just imagine riding shotgun during Shark Tank, like that, just less cologne and hair dye. Today, companies stay private longer. Most of the money is made before a company even gets to Wall Street. With Sweater, you can invest in exciting companies when you can make the biggest difference. Sweater isn't stock trading. It takes 3 to 5 years or longer for companies to be built. There are regular intervals when you can withdraw funds, but you'll experience the greatest success with a long-term mindset. And your investment is growing with real companies, not some flimsy internet currency based on a meme. We can only make a difference if we're all invested.
Ooh, someone done fired some shots at Dogecoin. But I do like these videos. It's kind of explaining what's going on. So we're gonna watch these videos. But they're trying to go with like a Shark Tank metric. I want to provide some color on this. But this is we're looking at an S1. This is a company that's regulated with the SEC, that's going public to do other companies. We're going to see the companies that are in here, but let's listen to, you see, there's actually a lot of videos in here, but I want to look at them. This might be a longer video, but I'm going to give my color on what this is, and this is something you really can't see until you sign up. So let's take a look at more of some of these videos.
So how is Sweater going to invest your money? Good question. It's your money after all. The short answer is we're going to invest in emerging technology and product companies poised for growth. Companies you'll see in your life or at work. The long answer is a bit more involved. With all of our individual threads, we can make $1 billion Sweater. If we have 1 million people committing $1,000 each, that's the same investing power. We pool our money to make our investments just as powerful as the big funds. We use that power to invest in a lot of different companies. By having a large portfolio of different companies, Sweater is able to lower the risk of our investment. It's the concept of not putting all your eggs in one basket. Most venture firms will have their eggs in roughly 30 baskets. Sweater has 5 to 10 times that many baskets. Those could be a direct investment in a young company from their pre-seed to their Series B. It could be us co-investing with one of our dozens of VC fund partners, or it could be a secondary investment, which was when we buy shares from early founders or employees of an established company that has still not gone public. We are actively looking for these investment opportunities and have built a network of investment scouts to find great companies. Do you want to know more about these companies? Sweater wants to tell you. The Sweater app is constantly updated to let you know what is happening with your investment. You don't have to wait for a quarterly or annual report. Sweater gives you instant reporting every time you get on the app.
And I think that's something super important to understand. Now, I do have some private funds from companies, really don't want to disclose who they are, but I have bought some private funds. But generally, to buy private funds from companies, you have to be a qualified investor. You have to have over $250,000 made in the past 2 years, each of the past 2 years, plus the expectation to make that going forward, or $1 million in net worth, not including your home. So this is kind of an interesting way for normal people to get into it. Again, we're hearing the pitch. This is a Sweater's philosophy. Fully managed, meaning they manage it. Long-term mindset. I'm going to sum these up. You're welcome to sign in the app and look at it yourself. I just don't want to totally go through their app if there's something that I'm questioning. So fully managed means they manage it. It's hands-off. Long-term mindset means you're not going to be able to sell this at any time. NAV is the shares. You remember I told you I got 250 shares by putting in $5,000 because the share value is $20 per unit. But this is actually interesting. They're going to have different windows where you can redeem. And this is one of the things that, it's usually when you make an investment in a venture capital fund or with a venture capital company, meaning a company that's not public on the stock market, you have to wait until it goes public to exit, or you sell your shares to someone else. They've actually got redemption windows. So I want to watch this video.
An investment into a venture capital fund typically has a lockup period of 10 years or more as companies grow and mature. But Sweater has worked directly with the Securities and Exchange Commission to develop unique redemption windows that you can access in the case of emergencies. This doesn't exist anywhere else in venture capital. We have an entire video dedicated just to this topic inside the app if you'd like to learn more.
Oh, okay. Well, we didn't learn more. Maybe we'll learn more about. So they've got the pricing dynamics, the risk of investment, liquidity. Again, this is interesting because we're not even looking at the companies that are involved in here yet. We're looking at how the base platform works, because this is, again, a review of the Sweater app, not of the companies inside of it. But I do think we might want to dig into some of the companies inside of it. If this gets enough views, I'm happy to dig into every single one of these companies inside the Sweater app, because it's no longer IPO season. No one wants to IPO in the current climate we're in of heading towards a recession or heading towards a depression or whatever we want to say the world is going on right now. But let's take a look at the liquidity, how Sweater gets liquidity. Kind of like, if you've ever heard of shitcoins, we're using the term shitcoin. If you ever heard of shitcoins in the crypto world, you need liquidity. You need a good asset to buy and sell. So let's just see how this company gets its liquidity.
Your financial assets are worth different amounts of money, obviously, but not all your assets are liquid. Liquidity simply refers to how accessible that asset is at any given time. In venture capital, your money is being invested into companies that take 5 to 10 years or even longer to mature and return your money to you. In the meantime, your money is locked up. That makes it illiquid. These long time frames can be hard to wait for, especially if an important life event comes up. This is why Sweater worked with the Securities and Exchange Commission to offer redemption windows every 6 months. This is somewhat unheard of in the world of venture capital. It's designed for emergency use for those unpredictable life events that can happen to any of us. Here's how it works. Every 6 months during a redemption window, 5% of Sweater's total fund value is up for repurchase. At this time, you can withdraw funds at the current net asset value as Sweater repurchases shares from you. Say Sweater has $100 million in the fund. That means during the redemption window, Sweater is committing to repurchase up to $5 million from its members. But in the same window, let's say requests are actually $10 million. Since the requests are double the authorized redemptions, each member would receive half of whatever they requested. So the total redemptions would still equal 5%. These members would be able to make another request at the next redemption window in 6 months. We created these redemption windows for emergency situations. Sweater is not your stock trading account. To feel comfortable with investing in the VC asset class, we invite you to consider the following. First, have a long-term mindset. Venture-backed companies need 5 to 10 years or longer to provide liquidity back to the fund. You need patience to see your investment pay off. That's what the big investors do, and that's what we need from you as well. Second, acknowledge the risk of venture capital. We invest long-term on promising startups that we believe will grow big and potentially change the world. However, we never recommend investing money you can't afford to lose. With Sweater, we've helped mitigate your risk with unique redemption windows. This kind of liquidity doesn't exist anywhere else in venture capital. We built these emergency liquidity situations into Sweater because we understand unexpected situations may arise in your life, because that's just a part of life. But above all, it's because we have your best interests in mind.
I like this guy more and more. He's breaking down things real easy, real simply. I would look, CEO of Sweater, if you want to come have a discussion on this channel, I would love it. I would welcome you. I don't know if you can due to SEC and all that, but I don't see why not. I'd love to, let recurring investments. So I did set it up to buy $50 every Friday. So you can set that up. I think recurring investments is really simple. But stewardship is actually something really interesting. Talking about the guiding principles and things like that. Let's see how long this is.
When you invest with Sweater, you put your trust in us. We take this responsibility very seriously, from ensuring your investment is secure, to acting in your best interests, to reflecting an accurate value of the fund. But stewardship doesn't stop at our members. We also believe Sweater has a responsibility to our community of founders and portfolio companies to create the best opportunities for both to succeed. Those are not mutually exclusive. In fact, we believe members and portfolio companies create a virtuous cycle that builds success. With your investments, we are able to give exciting companies opportunities they otherwise would not have had. As those companies grow and mature, our fund grows stronger. But all of this hinges on the trust our members and portfolio companies put in the hands behind the wheel, or knitting needles in Sweater's case. We take that responsibility seriously because what we do is only possible with the individual contribution of people just like you. We act in our members' best interest because we've been locked out of venture capital investing too. It's time we all had access and we're ready for change. We act in our portfolio companies and founders' best interests because we know what it's like to have a great idea tied to the ground by circumstance. But we also know what it's like when you have the momentum to really make something happen. That's why every investment matters. Every portfolio company matters. We will build a better world through venture capital. That starts with building a stronger venture community and environment where more ideas can thrive and more people have the opportunity to help make them a reality. That is stewardship. That is Sweater.
Now, I'll tell you, this very much reminds me of Titan, which is another app that I use. I'll link Titan up above if I remember to do this in the editing process. I'm just one guy, so I don't always remember to do it. But Titan is a one like this. It's a managed portfolio with stewardship, has a nice founder and everything like that. Okay, here. Let's watch these last 3 videos because I think they're useful, and then we're going to dig into the actual companies that are here. Again, we're doing like an S1 review. We're going to look high level at these companies, and if you comment below if you're interested in this, let's dig into every single one of these companies. I don't even know the companies yet. I put $5,000 and $50 a week reinvesting into this without knowing any of the companies. I'm stupid, I know. But let's take a look at these. What is Sweater's investing strategy? So how do they pick these companies, which we're going to see who they are? What is the Cashmere Fund, which I believe they're calling it the Cashmere Fund #1 because cashmere is a type of sweater. I love that I have Minesweeper on my sweater that is much too small. I got to lose weight here to wear my Minesweeper sweater. What is it? And I think they're looking to make other funds in the future. So let's take a look. What's their investing strategy? What's the Cashmere Fund? And what companies they look for? And then we'll look at the companies.
Sweater's investment strategy is built around a concept called large portfolio theory. It's kind of like an index fund, but for private companies. For example, a traditional VC fund typically invests in 20 or 30 startups in its lifetime. By contrast, Sweater will invest into hundreds of venture-qualified companies, and even thousands as we continue to grow. A large portfolio mitigates macroeconomic risks like downturns or global conflict. It does not eliminate all risk, but it will help levelize risk-return profiles over time. Casting a wider net also increases the likelihood that we will find transformational companies and bring them into the portfolio. The larger the Sweater community, the wider we can cast that net, and the greater the impact we can all achieve together.
So again, like we heard before, this is about putting your eggs not all in one basket. And they can invest in a lot of companies. And in the venture capital world, if you invest in 10 companies and one does well, it makes up for way more than the other 9 that failed. So I think that's kind of interesting. Let's take a look, and then I want to dig into the rest of the app and the companies. But what is the Cashmere Fund, which is the first fund?
The Sweater Cashmere Fund invests in high-growth startups that we believe will shape the world. These are investments ranging from early-stage pre-seed through Series B companies, all the way through pre-IPO secondaries. We're even reserving some funds for emerging fund managers that specialize in specific industries. Every startup in the Cashmere Fund is consumer-touching because we want them to change the way that we live. Think consumer products, marketplace technologies, and software that you may use at work. We believe venture capital investing shapes the future, and the right to shape the future belongs to everyone.
I literally haven't looked at the companies yet. I have no clue. We're going to find out together, but it sounds like a lot of SaaS companies or software as a service companies. That's what they're going for, because nobody's really making hardware at the levels they're talking about, they're prospecting about. I have a feeling that when we dig in the actual companies, it'll be a lot of software as a service companies. But let's see, what do we look for in companies before we invest? And then we're going to see if we can figure out the companies.
We are only as good as the investments we make. End of story. It is our duty to our members to find and invest into transformative startups with tenacious founders. To determine this, we look at a very specific set of criteria when we make investments. Let's examine the founders first. Without amazing founders, it doesn't matter how good the idea is. Founders must have the skills to go the distance with their startups. Can they articulate their vision? Can they execute? Have they become experts in the problem they are solving? Can they persuade world-class talent to join them? Do they have the mental fortitude to overcome countless obstacles? Ultimately, can these founders pull it off? We have to have an uncompromising belief that they can. Once you have qualified founders, the opportunity they present comes next. Each opportunity must have venture backable scale, which basically means it needs to have the DNA to get really big. We examine macro trends to understand where the world is heading, not just where it is today. We must have conviction that the market opportunity is big enough. But let's be honest, no one cares how big the market can be if the problem the founders are solving isn't compelling. The problem must be clearly articulated and have evidence to back how widespread the problem is and how deeply the pain affects those involved. If the problem is compelling, how are the founders actually solving that problem? There are a lot of wrong ways to solve a good problem. What evidence do the founders have that their solution will work? How did they discover or create the solution? Even if the idea is amazing, they have to be turned into reality. Let's talk about execution. Can these founders actually get this solution into the hands of their future customers? Do the economics of the business model create a sustainable business? How are they creating moats that protect them from future competition? And how are they setting themselves up to one day be acquired or maybe IPO? If everything checks out, we still have to make sure the economics of the opportunity for the fund makes sense. This ranges from the price of the round to oversight provisions to the timing of the close to how it fits in with the rest of the portfolio. There is no perfect formula at the end of the day. Every opportunity is unique and requires a hands-on approach to determine if it's the right fit for Sweater and its members. And we are relentless in our pursuit of finding the startups and founders that will shape the future and provide fantastic returns for everyone involved.
All right, very interesting. We've kind of looked at kind of the getting started in the app, and what I want to do is I want to see what the heck are the companies now. So this is, I'll show you. I'm going to jump back to the app so you can see on the bottom there's a tab that says Venture 101 that teaches you all about venture capital. Make sure, okay, there's nothing crazy there. Oh, hold on. Venture 101 that teaches you all about venture capital. You'll see linked accounts, legal, other stuff like that. Let's take a look at the dashboard. So I've got my dashboard. And okay. So you can see I just signed up probably an hour ago, so I don't have the shares yet, but you'll see I have $5,002 pending to get that processing fee. I can always go in and make a one-time investment. I already have a weekly $50 investment. I have weekly about $500 that invest in a bunch of different apps every single week. And you'll be able to track those investments, but let's take a look. Okay. Awesome. Oh, this is really cool. So I can see the companies that right now, okay. Oh, they don't have any company. I'm reading ahead. Let's take a look. Come on.
Welcome to the investment portfolio section of the Sweater app. As you can imagine, we're starting from ground zero with your participation here in the private beta. With you and everyone else that's participating in the private beta, we're bringing in real money into the Cashmere Fund for us to go out and make our first investments. As we make those investments, we're going to detail who those companies are right here in this section for you. We appreciate your patience and frankly, your participation in this very early stage of Sweater. Here,
Oops. We froze up for a second. Give me just a second. But what we're seeing right now, this video is in a different format than the rest of their site, unfortunately. But what they're saying is that right now, this is why we do it live. You're seeing this message. You're at the forefront of a new era, meaning why did I do no looking at what portfolios they had and different things like that? Because they don't. I love the concept. Let's see if we can fast forward a little bit here.
welcome to the
I think we missed from about
who those
here.
companies are right here in this section for you. We appreciate your patience and frankly, your participation in this very early stage of Sweater. Here in this section, you're going to be able to see all the dozens and eventually hundreds investments that we make over the coming years so that you can always be up to date and have those courtside seats to everything that's happening inside the Sweater community.
Well, thank you, Sweater, for giving me content, I guess, in the future. This is going to be basically IPOs, because nobody wants to IPO with a looming recession or a looming depression, but people need investments. So this is actually kind of an interesting way to IPO, and that's what's going to happen. But they've also got something that talks about founder interviews. Okay. So here's what's cool. These are the potential companies they're looking at. Okay, I'm liking this. This is the potential CEOs that they're looking at. Is they don't want to, so legally, they probably can't put them in portfolio companies because they haven't decided to make the investment there yet. So that $5,002 is just going to sit there, and well, $5,000 and then $50 a week every Friday. It's just going to sit there until they decide what they want to invest in. I know it's crazy to give a company $5,000, but hey. Let's just take a look at a few of these. Let's see if I know any of these, first of all. That one looks interesting. Again, I'm just scrolling these. These are the companies they're considering for sure. I see 2 or 3 I want to take a look at. Okay. I've heard of Gainsight, so I want to take a look at Gainsight. Let's just see how long these are. Just to kind of see.
All right, welcome everyone. My name is Jesse Randall.
Okay.
I'm the founder and CEO of Sweater.
These are very long.
And, like we've said before, Sweater's entire objective is to create a venture fund that anyone can put money into. We're well on our way to getting that into market and excited to get it in your hands.
So what they've done, I'm obviously not going to play a 40-minute video right now, but what they've done is they've gone ahead and they've met with all of these VCs, probably virtually nowadays, but flat file. Reimagining the process on software company and their customers. So you can read about these companies. So this is a technical founder story that's all about onboarding. So what do they do? Flat file, how David began solving for his own frustrations as an engineer, determining market fit. Okay, yeah. And then this one that I was about to play, so you can read about Gainsight is so again, I guessed and I'm right. I love to, and I didn't look. I love to guess and be right. That this is mostly software as a service companies. So software as a service is something I have a lot of background in. This is actually going to be really fun, this app, and we're not going to cover this app in one video because we can't. We literally can't. WebPT started simply trying to improve her own practice. Oh, it's a physical therapist. A little market research later faced similar issues, went in. So this is a software as a service for physical therapists, is my assumption. Skimming this real quick. I saw another one about solar. Where's the solar one? That one's going to take a lot of money. Manly Bands. It's a jewelry store for men. I got my... Oh, I don't have my Apple Watch on right now. But I usually have my Apple Watch on. It's charging right now. Created a place for people to browse hundreds of masculine wedding bands. Interesting. Interesting. So these are companies that are not on the stock market yet. This is pre-IPO, round A, round B. I'm telling you, I've heard of one of these companies on this list before. Maybe this one? Nope. 53 employees. Nope. CRM. It's all SaaS companies. Yeah. It's all SaaS companies. Software as a service. Win-win. Well, except for the wedding band one. Professional athletes together with their fans to fundraise for charities. CrossNet. There's one more. Okay, Ancestry Solar. .com boom. So it's interesting. So what I would tell you is, as of right now, there's nothing in the portfolio because there's nothing in the portfolio. These buttons on the bottom are the main points of the dashboard. The dashboard's just bringing you to those buttons on the bottom. This may be a case of get in early. Who knows? But I love the app. I love everything that's going on. You can see that I'm a founding member. I still say, guys, that's fine. Founding member 1633. Send me a sweater, and I'll wear your sweater. I need a 2XL or a 3XL. I like my sweaters loose, so maybe a 3XL might work. I want a sweater to talk more about sweater, but this is really cool because essentially what you're looking at right here is a way for people to get into companies before they IPO, which is pretty revolutionary and not something that I've seen done before in this way. Yes, you do have to trust in these people. You're not picking the companies they're going to go with. They're picking the companies they're going to go with. I think they probably just opened for business this week. I'm number 1600. If I do find a way to get an invite link or send you an invite link, let me look real quick. See if there's a way. Linked accounts. Nope. I'm looking at this because I don't know this app well enough not to disclose my own personal information. So we got support. We've got feedback. We've got legal. I am opening up. Let me show you one more thing that I think is very, 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 very important. It's loading right now. I do have Starlink now, so it's a little slower than my Comcast was. just a tiny bit. But this is their prospectus. So this is basically the S1 for sweater. This is a prospectus filed by this company with the Securities and Exchange Commission. And let's download it real quick. Whoa, Chinese letters. Let's go to the not Chinese letter, wingdings. So we go to our legal, we go to prospectus. Let's just load it once more. If I can get that prospectus downloaded, I may need to do it on my computer. I will download that prospectus and link it below, but you can see April 11th, 2022 is the date on that prospectus. And a lot of it just looks like mumbo jumbo, but we've heard a lot of it. Let's just see. Fund is designed for long-term investors. You know, I'm gonna skim it real quick. I wish I could make it a little bit bigger, but I don't think I can because of the way they format it in the app. Use of proceeds, risk, fund management. Let's just skim it real quick. Investment objectives and strategies. The fund's objective is to generate long-term capital appreciation in smaller companies. Investment advisor is them. Oh, wait, here we go. Hold on. Aha. So, this is something we didn't see mentioned anywhere. Let's zoom in here real quick. They are taking 2.5% of the fund's daily average rate calculated of the net asset value. So that's how they're making money. That was a question I kind of wanted to answer before I ended this video anyway. That's how they're making their money, is that 2.5% of the average value. Remember, they said that value can change. Right now, that value, everybody's just getting in, so that value is $20 per share with a $2 purchase thing. So I may, if we think about that, you may want to contribute $200 monthly instead of $50 weekly if they're going to charge you that $2 every time. So I might change back to $200 or $250 monthly, or smartly $252 monthly. So I'm getting contractual expertise. The fund will invest the proceeds on an ongoing basis. Distribution dividend. Okay. Okay, so automatic reinvesting of dividends. Again, if I can get this bigger, I will post it down below. It's not a liquid investment, even though they have those exit windows we talked about. Not listed on any securities exchange. I'm gonna skim through this real quick. Fund is newly formed, has no history. Fees and expenses. Okay. Management fees. Hold up. Hold up. We got some more here. So they have a management fee, marketing expenses, other expenses. So, you're paying 5.98%. So you're paying 5.98% in management fees on this. So this is a lot more than you're paying in pretty much any actively managed ETF. Now, again, none of these videos showed this. I'm showing you the prospectus. Why am I showing you the prospectus? Why, I'm going to continue going through the prospectus. I'm at page 15 to 59. I apologize that this video is getting long, but I think this is useful for you to see, and I'm going to zoom in. Repay with a fund. Okay. Your purchase fee. Although your actual cost may be higher or lower. Cost of investing. So yeah, they're about 6% is your expense is 6% of every dollar. 6 cents on a dollar is going back to them to run it. They have no operating history. Oh my God, this reads just like an S1. If you know anything about no history of operating profits, it reads just like an S1. Non-diversified. Wait. The fund is a non-diversified fund is defined by the Investment Company Act. A non-diversified fund may have a significant part of its investments in a smaller number of issuers. Yeah, than a diversified fund. Yeah, it's just saying, we invest in startups. Reliance on the advisor. Wait, the fund? The fund has no employees. Instead, depends on the investment expertise, skill, and network of the business context of the advisor. So we're betting a lot on that guy in a sweater. I'd like to talk to the guy in the sweater. With your questions, put your questions below. If I get a chance to talk to the guy in the sweater, I'm not doing this alone. I want all y'all involved in this. But what's cool is this fund, these companies can't be shorted. Yes, they can fail. They can go to zero, but they can't be shorted. You can't have a whole bunch of puts and calls and everything on this. This is essentially a private stock market, which is really cool. Co-investment risk, private company risk, venture capital investing risk. Hey, if you invest in venture capital, you can lose it all. I'm zooming into everything. Like, I'll just show you so you can kind of see illiquid investments, performance fees. We looked at all those things. Publicly traded equities. If they do go public, they'll buy you out at like the IPO price because they're not a stockbroker. Or they'll give you the option to take the stock. Foreign currency risks, so something could be foreign in nature. Funds, board, and officers. Management costs. Let's take a look. We saw those management fees. Yep. NAV daily. Okay, so the fund's management fee is 2.5%, but they're taking like 3% for marketing and other things like that. So again, I'm going to post this below. And we've got the portfolio manager. So we've got Jesse Randall and Chad Lewinsky, primarily responsible for the management. Again, we saw a lot about Jesse. Not sure who Chad is. He might have been the other gentleman in some of the videos, but he wasn't titled. Level 1. Their value. So they're explaining how they value these funds. It's basically how you value a private fund is you value what the reasonable number of shares that you hold were recently sold or purchased for. Is how you kind of value a fund, because it's not a stock market. The shares are not publicly traded. So they said in one of the videos that, earlier is they won't trade every single day. It's just going to trade on some days. It's not going to trade every single day. You might see, if you've got 5 companies in there, you might see the price change once a quarter. If you've got 100 companies, yeah, you'll see the price change maybe once a week. So that'll give you the idea there. They're using generally accepted accounting rules. Again, this is a big document. We're about 50 minutes in, getting started opening the account. Hey, look, we already did that. Shows you the app will provide step-by-step instructions. You need to link your bank account, which I did. Share purchases will be done that way. Additional information about the app. Share repurchases. Okay, so remember they were talking about that you can get out at certain times. So the first repurchase offer, the first repurchase offer is going to be February 2023. That's your first time to get out. It's February 2023. They're going to do in January. So I guess they plan to get into their first real company maybe mid to end of June. Just based on that, because they were saying every 6 months, repurchase request will return when strictly reserved. Early repurchase fee. Okay, so this is important. This is really important. If you want to cash out early, remember they said that this is for emergencies, and they kept saying, hey, you've got your prospectus, we're looking at this. This is important. I know I was wrapping up a minute ago, but this is super important, and I don't think this is something people are going to miss. I missed this. I thought there were actually companies involved already, but $5,000 is gone, and who knows what that will be. But if you wait 185 days, you have an early, so that's 6 months. If you want to pull out within 6 months, you're going to pay a 2% fee to pull out within 6 months. If you're going to wait a year, you're going to pay 1.5% to pull out within a year. If you're going to wait 2 years, you'll pay not 2 years. That's a year and a half. You'll pay 0.5%, but after 2 years, you have no penalty for pulling your money out. So essentially, that $5,000 has to stay there for 2 years. And remember, if too many people are repurchasing, only 5% of the fund, that's important. 5% of the fund is repurchasable. So if people request you can get out. So if people request 10%, then what happens is the people who will get half of what they wanted back in that quarter. So it could take you a long time to get out. Now they could change those terms at any time, but this is their prospectus. The fund is permitted to borrow such borrowing. So it's saying, hey, we can borrow distributions, dividend reinvesting plan. So essentially, you eventually have to exit, but only 5% of people can exit every 6 months, is what this is saying. So yes, look, one of my favorite questions. Tax matters! If you're in the crypto world, yeah, that's fun. Taxation is a registered investment company. If the fund holds more than 10% in a foreign company, taxation of U.S. shareholders. I don't see anything crazy here. Again, complete termination, sale or exchange treatment. Okay. And custodian, UMB Bank is the custodian, which is located in Missouri. So this is all done really well. RSM US LLP in Denver, Colorado is the public accounting firm. So they are square and everything with the SEC. So yes, I have $5,052 now, because I guess, as Rebecca Black says, it's Friday, gotta get down on Friday. So you're gonna see this about 2 or 3 hours after I make it right now, but I want you to watch it, ask any questions below, and like I said, I would love to have a dialogue and have a discussion with your questions below, and the CEO of this company, which looks like a cool guy. Again, probably 3XL. Hey, if you want to send me a sweater, give me in the comments below. I say to this company, you know who I am because you got my number right there. You got my social security number and everything like that. So just send a 3XL sweater to 1633. I'd like that because I put $5,000 in your company blind. Well, $5,052 in your company blind. This is Richard from No Pants Profits coming to you with a new way to buy IPOs that's not the stock market. Weird as it is, this is a new way to buy IPOs that are not the stock market. And I want you to remember, I'm going to change my slogan on the way out real quick. When you wear no pants, like me, all you got left to lose is your sweater. I mean, usually it's your nice Hawaiian shirt, but all you got to lose is your Minesweeper sweater. This is Richard from No Pants Profits saying, don't lose your sweater, but maybe sign up for sweater just to see what's going on. If you got any questions, drop them in the comments below. I'll see you around later. Bye.